Hey traders, welcome back. So this is part two. We're in this 10 steps to becoming a profitable trader. This is part two of selecting the strategy. So in the previous video, go and check it out. We talked about strategy reboot. So we're wiping the slate clean. We talked about analyzing or assessing market conditions. And we talked about then picking strategies that fit those conditions. And it's something I'm a big believer in. Now we're going to our personality analysis that we did a couple of videos ago. We talked about the personality, the kind of things that annoy us or get us onto trade on tilt, whether that is, overactive. Let's clear the board a little bit, shall we? We're getting a bit messy here. Some of the things that trigger us into behavior that's causing us to be a bad trader, a less optimal trader, let's say that. And again, looking at it from perspective of we are the owner of a trading firm and we are now coaching our traders, yourself, stepping out, looking in, giving advice. So matching the strategy with the personality you are and the things that trigger you. So if you are the type of person that trades too frequently, trades too much, and that's causing you to lose more trades than you should be, then you need to be picking a strategy that isn't as active, that doesn't get you into that zone of I've got to trade, I've got to trade, I've got to trade. Maybe it's got very specific rules to it. Maybe it's something that doesn't allow you the free reign to be constantly trading and trading. So perhaps that is, listen, you've got one shot at buying this pullback, and if it doesn't work, then you don't buy it again. Okay, and these are the rules for it. We've got rules 1, we've got 2, and then we've got 3, and you have to have those 3 in sequence to make the trade. Sticking to those will mean that you're not going to overtrade. Another one part of the strategy could be, hey, listen, we use an analogy of chasing stuff and getting frustrated by that and then overtrading because you're chasing in revenge trading. So you could literally say, well, okay, if that's the case, I don't want to buy pullbacks because that's going to trigger that thing for me. So if you're here and you're pulling back and you're buying this and you're missing it, that's the trigger that makes you chase. So let's not trade that strategy because I don't want to trigger that negative emotion. Let's trade something else, like let's trade a double bottom. Okay, this is a different scenario where you've got, what I'm saying is you've got a lot more refined area to take your trade. Yes, you might say, well, I've missed it. I missed it, I might chase it here. And again, it's all very subjective, guys. Here you might say, okay, well, I've still got a zone where it's okay to take it. Whereas here, perhaps you're still thinking, well, it's a breakout here. Whatever it may be, it might be the other way around for you. You might be saying, listen, I chased these too late. Instead of buying them kind of at the sweet spot here, I'm buying them here and I'm getting caught out on this move and then it's going again. Whatever it may be. But my point is that you're trying to take, the idea is, guys, you're taking the strategy out that doesn't fit with who you are as a trader. If you're a swing trader and you'll find yourself buying too early, for example, then get a strategy that doesn't allow you to do that. Find a strategy that doesn't trigger that emotion of buying too early and that thing, because it all comes down to, it's not the strategy, it's how you execute the strategy and the way you're putting it into the market that's giving you the problem as a trader. The strategy itself is sound, more than likely. I mean, may not be, this is why we go back to the last video and talk about matching it with the market conditions. But generally speaking, guys, if you're in a bull market and you're buying dips, you're making money. So all you got to do is work out what market you're in. Are you in a range-bound environment for this week in the market? Yes, we are. Mean reversion trade. This is going to make you money. Are we in a downtrend in the next week? Can I identify that? Yes, we are. It looks like we are. Then I'm going to sell pullbacks because there's going to be aggressive moves to the low. Or I'm going to sell breaks to the low. Whatever. Very broadly speaking, you will make money with that. So the key comes down to making sure that you're using the right tool for the right job. The tool's not a hard tool to figure out. Mean reversion, volatility expansion, buying pullbacks, selling extremes. That's all you've got, really. And then you just kind of mix and matching it depending on the conditions. So if you can get the conditions right, the problem comes in where you're executing something in the wrong environment, and most importantly, you're doing something where you're executing the strategy wrong based on the emotional feeling. Does that make sense? So you're frustrated that you've missed the move, so you're executing a strategy that shouldn't be executed. You're frustrated, or you're you're trading too much size because you think this is the greatest thing since sliced bread, and you're piling in all your chips because you think it's great, and it's pulling back and it's stopping you out, which will do because over time you're going to get a lot of them that don't work. All this kind of behavior is what is causing the downfall of your equity curve. It's nothing else but that. It's nothing else but using the right strategy for the right job, making sure you're sticking to the strategy. So when we look at this and we say, hey, how are we picking a strategy that's working for us? We need to look at the bigger picture and say, listen, I'm the sort of guy who gets frustrated at this. I'm the sort of guy who triggers negative behavior from this. So strategy has to fit, one, the market. Now, number two, your personality. Okay, now obviously if I had a one-to-one with you watching this now, we would talk and we'd say, listen, and we'd get a lot more drilled down into it. I'm trying to keep it broad for everybody because I know people have got different problems with trading and things they're struggling with, but ultimately, you know, that's it. That's the game, guys. It's market and person. If you can get a strategy that fits the market conditions you're in, most of the job done. But you'll still self-sabotage that if you can't execute it properly, or if you're making, you know, you're doing things that are wrong for it, or you're not sticking to the rules of the game. Your risk management is not in place, and you can still screw it up by that. So if you get both of those right, strategy for the market, strategy that fits you as a person, you will over time do much better than this, and this is out of sync. And I know we're just kind of touching on this now, and we could go really, we could talk on it for a whole day on this. We could really go down right into the personality type of thing, finding the right strategy for each different type of personality. We could go down to the market, finding strategies but that's the broad game, guys. And this is what we're doing now with this 10 steps, is we're wiping the slate clean and saying, hey, market conditions, please. Personality type, please. Where's the warning signs? Both of these, let me avoid that and let me put a broad structure in place that's going to make some money. Right, next video, we're talking about, good one, this, journaling. We said we're going to mention journaling, and I'm going to do a big thing on journaling because without this kind of the data that we have from the change, we're not going to know how to improve as we move on. So check out the next video, guys. See you there. Take care. Bye-bye.